We're going to walk through what's going on with the indexes. I want to focus on the breadth of the market, and I do want to go through some of the earnings that are going on there right now. This is going to be super informal, and it's going to be unedited. Subscribe, click all notifications. These come out at different times, and sometimes you want to be notified, especially if it's a couple hours late or early, depending upon what's going on. So we all know what we have here. We all know we have this doji. It's just staring at us, and it has a really big range to it today, and I think we should just start there. We look at the top here, and we can come down to the bottom. And that's pretty much one of the biggest dojis that we've had. And it's referred to it when you see it that way as a long-legged doji. Now I'm gonna just pull this out for a second and we might come back to that. But what I like to do is I like to just take a look and say, all right, how big is this? In other words, like how big is that range today that you saw from just that session? And it's a 1.5% range, which is pretty decent for a doji. Matter of fact, if you were to look through these, you really don't have anything like that where the open and the close are roughly the same exact area. And all throughout, if you really look, you don't see a lot of that. You'll come close, but to that level, it's not a lot. So what's that telling us? A lot of that is telling us that they probably want to be as flat as possible going into what? Expiration tomorrow, which is super interesting. Because if we come back to Thursday night and we look at the close, it's the same exact level. So if we come to this Thursday night close here on the market, you're right there. And then you come over here and you can see the numbers if you take a look right here. But you're literally right there. You're within a hair away. And I think that's super important because I think it's telling us something. I think they're saying, hey, let's see how tomorrow goes because last Friday was a suck salad. Now, we didn't do any kind of undercut here, but we were oversold here, and we are going to jump into that next. And I think that this is super important to get a lay of the land because people are looking at this and going, okay, well, now what do I do? And it's a really good question. What do you do now? So we're going to take off those levels for a second, and then from there, we're going to click on the body. Because we use the bodies, we don't use the wicks. Why don't we use wicks? Because wicks are price rejection. Now, it's not perfect, but you did undercut and then pierce through it. So if you want to see your first sign of having a problem tomorrow, a problem or a blessing, a problem, it's going to be right there. Let's put that magnet back on. Did you know you can go weak or strong? Yes, you can. All right, there it is. Well, hold on one second. There we go. So we want to see if we break that tomorrow. So what I like to do in the heat of things is just put a little alert there. So that alert will go off and say, hey, this is what's going on. And then I know what's going on and I can act on it. All right, I find that extremely helpful. It is to me, especially when you have a lot going on. Can we undercut now and go all the way back up? 100%. I do think we should note some things before going into this, that the RSI is matching perfectly with where we are, but we are undercutting here as well. So we have this rising wedge, and if we took a sec, what we would do is we'd clone that sucker, and then we just drop it up here and say, okay, do we have anything in here that makes any sense? Not really. I mean, I could drop it to here, but you're out of it. So I don't really view this as a channel. I could stretch it some way, but it's not really a channel. It's more of a rising wedge than anything. And they usually don't end the best. So we'd like to see some consolidation and go from there. The other thing that I would just point out before we go any further into the breath is that you have this big move down on Wednesday at 2 p.m. And this was on July 30th. And what do we say? Rejection, couldn't get through, over, trying, and it stops right in that area. And that all ties you back to the same exact level you were a week ago. I would just argue because people were looking at the market in the community today and saying, well, why aren't we moving? Well, we were oversold here. We got the oversold technical bounce. We got the higher high push on that bounce. And now people are looking at the market and going, wait a minute, I have all that news that I had. And from all that news, we'll clean this all off. And from all that news, I'm back to the same level. So do I really want to buy here? What do I know? What's better now? And what you're seeing is you're seeing a divergence. You're starting to see different stock selection. And I think that's important. But if we go any further, I think we should start with the NASDAQ. I have a really good walkthrough on a trade we did today. I'm probably going to do it for Saturday, just for time's sake. There's a lot going on with the earnings tonight I think you guys should know about. But the walkthrough is through APP, and we caught a really big trade. But you can see that you have the bullish engulfing right here. You can see that you did the undercut here, but you didn't have the bullish engulfing there. You can see you're back to the doji. The one thing that I would say that I don't think a lot of people are getting is this. So if I went to the NQ and I dropped my line right there, what do you say? You'd see a new closing high. And I don't think a lot of people are getting that. So we have the NASDAQ leading again, and then we could just simply go here to make sure of that and go Q divided by SPY, right? Because then we can always just see that. Because we look at that on a relative basis, right? We always want the Qs to lead. And then we're going to come here and let's get rid of my line for a sec, drop it down. And what do you see here? Well, we see a new high. Well, is it a new high or is that an all-time high on a relative basis? Okay, well, that's a Keep going so we can go all the way back. And then we're going to drop it right here so you can see it. And that is obviously the .com days. I'm going to come back to here and drop it down. And that is an all-time high. Matter of fact, you're flipping it. So you're at an all-time high on the NASDAQ versus in relation to the SPY, not versus, in relation to. I think that's really important that happened today and no one's even catching it or talking about it, that the NASDAQ on a relative basis is now at all-time highs in regards to the S&P. I think that's very telling. And then we're going to hear that means that we're toppy because we're back to these levels. It doesn't mean that. It doesn't mean anything like that. What it does mean is that you've been in the same range now for a year on a relative performance basis. That's what it means. And we're going to get into that on Saturday, because what it does mean, and I'm going to say it again, is that you have been in a relative performance basis with the NASDAQ versus the SPY for the past 12 months. Does that sound normal? It's because it's not. NASDAQ leads. NASDAQ always leads in a bull market. Always. So when you look back at this throughout history, what do you see during these runs? One leading, one not leading. So you're staying up in this area and you're just basing, and you've been basing for a year. Super important to get. And what do we have today? I argue, and I always preach this, no matter what time frame you're trading, and this is really important. You just might want to remember this. You always, even if you're trading a 5-minute or a 1-minute, you want to look for the bars that have the new closes, the higher closes, more than anything else, because you can't really fake the close because you have to buy. The algo really doesn't try to fake a close. They'll try and trip you up, but the closes, not so much. That's why some people will use just closes, but for their data. But I think that's super important, really important to take from that. But I do want to go through some breath before we go any further, because there are some things here that, hey, maybe it's not tomorrow, maybe it's the next day. I would say it's stock selection more than the whole thing moving at once. That's where my head is with it right now. I don't think it's anything more than that. I think it's stock selection. And I think if you're focused on stock selection, you'll be a little happier right now. But to start, if we take a look at S5FD, this is the 5-day. So we were oversold on Friday down at the 16 level. And that's not grossly oversold, but if you come here, and what I'll do is, let's come to here, get rid of the weak magnet, and drop that sucker down. All right, cool. So if we were going to look at this area, you would say, and let's just do 25. You would say that when we've gotten to here, that's a pretty oversold level for 25. We hit it, we bounced, and we're back at 50. 50 is like milquetoast. It's like that weird handshake when someone doesn't shake your hand the right way. You know, it's like, okay, we're right in the middle. So it is what it is. And these are some of the things I use for an S&P watch list. I don't know if we're going to get into all of them, but there's some things here that really stood out to me. So when I go through the 20, I really didn't move on the 20. And that's kind of interesting to me. Now, I'm only doing it to Wednesday because I don't have time to wait for Thursday's data. But that's kind of interesting, isn't it? The 5 rotated, but the 20 didn't. And what's that mean? Well, it could mean that you're engaging less names on the breadth side, and that would lead to the advancing declining. We'll get into that on Saturday. But I wouldn't sleep on the fact that this didn't really move between Monday, Tuesday, Wednesday on the 20-day, but the 5 did. Now, you know I have this all set up in a different chart up here where we can look at it all. But sometimes the devil's in the details, and you're going to lose the details in here. Now, you should be able to see that pretty clearly by how these are flatlining and how you're popping up, right? How could that happen? Because they're popping up some names and then they're selling others. They're popping up some names and they're selling others. Well, what kind of behavior leads to that? Distribution leads to that, and that's not great. So what we have here is we have a market that popped up that I'm telling you the NASDAQ's leading, possibly going to break out versus the S&P. And we have some bunch of earnings to go through, but we're really middle of the road here with rotation. Then if we go and take a look at this, to me this is fascinating because this is value versus growth. And just so you can see it for yourselves, there's Thursday. So we're going to turn this sucker into a line, and we're going to drop it to a 15. And it's going to load in, and we're going to get rid of the pre and the post. And what we're going to note here is that you're seeing a change in trend. Now, that change in trend started about July 30th, right when the market, collapsed. And since then, the values are starting to kind of lead a little bit, but then they're coming back and testing. So I would argue that the value has been more in a range-bound situation than leading here, but you have stopped and you have not hit a lower low, which is very different than what you've been doing for a very long period of time. Matter of fact, if you go back and take a look at how far before the turn was in April, it's been a while since you came out, almost made a higher high and didn't take out a new low. So what does this tell us? Well, they're diversifying out a little bit. And then you would ask a question like, have you seen any signs of that? And then I would respond, I have. I'm glad you asked. And then I would show you things like MO and say, yeah, they're out there. They're buying value. And then you would look at something like MO and realize, geez, they bought it all day. Well, why would you buy that if you think tech's going higher, right? See the conflicts? Watch this with BTI. But wait, there's more. See the conflicts? Look at BTI, all-time highs. I mean, they're literally stepping up the value name over and over and over again, right? No one's paying attention to them, but this is what's happening. So why the rotation? And then it gets even more. When you break it down into this, and my favorite part of the comments tonight are going to be, but then he didn't tell me what to do. And then if I go here and look here on just the sectors for a second, and I think it's important to look at the sectors, what was up? Metals was up, utilities was up, staples was up, XLP was up. That's it. XLK was kind of up because Apple's going to start getting into the cloud business and make their own chips. And they really didn't come out and say the cloud business, but they're going to go into it. If we take a look at what this is telling us, is this a defensive stance that they moved to today or an offensive stance? Well, if you're buying gold, you're buying the Utes, and you're buying staples, and you're buying the XLB, you're in a defensive stance. And I think that this is going to be lost on a lot of people because when they're looking at this, they're saying to themselves, oh, I think the market's going to do this, the market's going to do that. Here's what we know. We know we're back at the same exact level we were at, and we know that they're taking a defensive stance, but we know that the NASDAQ is starting to lead versus the S&P. So we have to unpack that. And you're not going to unpack that in a day. What we're going to have to do is just check the order flow and see what's going on out there. Because if you look at the XLP is setting up. Like if I went and looked at sectors and said, here's Thursday, and then I went through the other sectors and go, here's Wednesday, and here goes, well, here's last Thursday. All right, so did they buy more or less staples since last Thursday? Well, you would say they bought more staples since last Thursday, right? Like, don't overthink this stuff. And then if you start to go look at, well, the XLC, how did that go since last Thursday? Well, they're right in line with what they bought in communication. How about XLK? This actually should be up because of Apple, and it's not even up from last Thursday to this Thursday. So there's that as well. That's kind of interesting, isn't it? So when we're looking at tech, and we're seeing that that's not breaking out, but now we're looking at the XLY and that's lifting. And why would XLY lift over XLK? Well, one has a distinct discount of premium, meaning you have names out here like ANF that are trading at 8-9 times next year's earnings, or AEO, right? These companies are trading at huge discounts to their earnings on a historical basis. You know, it's really important to get this. A lot of people don't understand that even Kohl's, this company, and people are like, well, why do companies trade like this? They just do sometimes. People think they're going to go out of business, but the book value, tangible book, is $34.35. And people say, well, it can't be worth that, right? Because it wouldn't be there. But they said the same thing when we bought SLG at 28, and then it went to 65 before we kicked it. And that was back here when we were going to lose all the banks. So again, what do you have going on? I would argue that you have pools of capital that are looking for areas to put money that are at a discount to the S&P. You have pools of capital that are looking for places to put money that are at a discount to the S&P. And they are selling the expensive names. And I'll show you what I mean by this. The most expensive sector out there is software. So if you look at cloud or IGV, right? You can see how this is going. How'd that go? Not very well. CRM obviously had a boo-boo where they got hacked yet again. Google confirmed it, and you can see how it's acting. Someone will probably come out tomorrow and defend them, and the stock will probably pop up. That's where my head is with it. I have a position on the long side. And my thought on it is this. If you go take a look at Microsoft, which I was in, they use this to get out of software. They use this whole thing. Matter of fact, I had another position in software in Microsoft. I closed yesterday, locked in 50 points. I had a trade going into the earnings, and I didn't sell this because I was trying to hold it longer term, but you could see the writing on the wall with the reversal here. But let's not go down that rabbit hole right now. Let's stay on this rabbit hole. So they're selling the expensive stuff. And so what this means is the indexes can go flat for a period of time. And we can see rotation from expensive, and I think that's where we're going. I think that's what we should be focused on, the rotation from expensive to cheap name. I think that they're going to start looking for value spots to put their capital, and I think that's what you're seeing with some of these names today. Now, does that mean you have to go out there and buy Walmart? You don't have to do anything. You don't have to do anything you don't want, but I mean, Walmart's back to the gap. Go look at these names in comparison to where they were last Thursday, and I think that you'll note that. Like I kept looking at Costco, and I wanted to get involved. And then I'm like, I kind of missed it. And then we got the move today. But those kinds of names right now, those kinds of names are the cat's pajamas. Even Casey's, I was looking at that. And you start looking at the auto parts names. They started hitting highs. Take a look at AutoZone, right? All this stuff's moving since when? Oh, since last Thursday, what are they doing? They're buying value names, consistent earnings value names that are trading at discounts, relative discounts to their historical valuations, because someone's going to say something else about the PE of the auto parts companies. So relative to where they normally trade. That's very important. Please understand that. All right, so then we circle it all back around and go, well, where does this leave us? I don't think it leaves us anywhere that we don't want to be and that we're just going through a super healthy rotation, where some of these sectors are completely beaten down and they shouldn't be trading at the levels that they are. So that leaves us in names like NVIDIA and staring at these dojis and wondering if it's going to break out or not. And it looked like it was today, but it didn't. And we have the tariff news, which we went over briefly, and that's been a very nice thing. I mean, that's working out very well. The sleeper's Apple, and I don't think people are fully understanding this yet. I was very clear that we had a position in it in the community from back here. I think there was 3 days left to get into the community. I'm talking fast because I'm trying to pack it all in before I have to hop on a conference call here. I really think that people aren't getting this yet. When they start understanding, like, well, why would they be building all these data centers? I don't know. How did AWS start? How did Azure start? Didn't they start just building data centers? Something to think about. Really important. This is trading at a huge discount to the market. Why did Google go down today? Why didn't Google rally up today? Why is Microsoft dropping? Why did Amazon drop, right? So like when you start looking at all these things and you start connecting the dots, like why can't this get out of its own way today? My personal belief is that because they're going to get competition from, I'm probably, it's far out there, but that's where my head's going with it. I think you need to look at that stuff. And the other thing I would say to you is you're seeing names like this, like Dollar Tree. You're seeing these kinds of names that are just starting to lift out of nowhere. Disclosure, I have a position in Dollar General. But you're seeing these names just start to lift out of nowhere and start to get a pretty decent vibe. I do want to go through some names for you guys here, just that I'm seeing after hours. TTT, dumpster fire, floating down the river. CFO out, put into a non-managerial role. Disclosure, I don't have to do them. Someone's like, you don't have to do disclosures. I think I should, just at least tell you. But I am short this. Just the way that they worded that, it wasn't great. So I am short that right now. This was okay. Everyone's excited because they're saying we are going to accelerate our growth. And so that comment, as soon as it wasn't like great. I was actually going to short this after hours when I saw this dumpster fire of a quarter, but they're out there with the rhetoric like, no, everything's going to turn around. Things are going to change for me. I can feel it. And then everyone's like, okay. And so they bought the stock. We'll say pins, dumpster fire floating down the with a bunch of raccoons. You get it. Team I haven't listened to, so I don't really want to comment on it. Take Two, I have not listened to. Someone else told me that they put out their timelines for Badlands and GTA, so it is holding in here very, very nicely, but I have not heard that. And the other one that I would just point out there that you guys have been going crazy for is this MP. And obviously you went all the way up to 82 and you're starting to come back down to earth, but this was a really good quarter and people are going to listen to what they have to say, especially about the future considering of rare earths. That is it.